After the pandemic, Canada went through one of the fastest housing booms in the world. At the peak, the national index jumped 26% in a single year, and detached houses were up 35% year on year. But after the high in March 2022, prices kept sliding. By the time we released this video, the national index had fallen back to where it was in April 2021, and the downward trend is still in place.
Condo sales in some major Canadian markets are continuing to drop to lows not seen in decades. It has some condo owners looking to offload their properties, worried that things will only get worse.
Well, there is more evidence tonight of Toronto's troubled housing market.
The city saw its worst July in decades for new home sales.
You could say the past few years have been a roller coaster for Canada's property market. And even after multiple rate cuts, there's no sign of a turnaround. As Australia's national house price growth accelerates, plenty of people are worried. Will we stumble like Canada? Can rate cuts really keep Australian prices rising? Some longtime bears insist Australia will sooner or later repeat Canada's fate. To get to the bottom of it, I did a deep dive and found that the decisive factor behind Canada's market is, surprisingly, the same as New Zealand's. It's a piece many people overlook, and it's the key to understanding where both Australian and the Canadian housing markets are headed. Hi, I'm Alex, and welcome to Aus Property Strategy, where I break down real estate investment strategies, key economic trends, and proven paths to wealth creation. If you find this helpful, go ahead and smash that subscribe button, turn on the notification bell, and catch our new videos every week. Without further ado, let's jump right in. Let's get straight to it and see how wild this roller coaster has been in Canada. By the end of August 2025, the national price index was down 19.3% from its pandemic peak. Of course, every city moves differently, so we picked the most representative and most populous city, Toronto, as our example. Think of Toronto as the equivalent of Sydney, Greater Toronto as Greater Sydney, and Ontario as New South Wales. With that in mind, it's easier to follow. Ontario's average property price fell 26%, Greater Toronto dropped 24%, and Oakville, Toronto's southwest, fell 31%. On the monthly chart, you can clearly see the national market moving almost in lockstep with Greater Toronto. No surprise when Ontario has 14.7 million people, about 36% of the country. After the pandemic, prices started lifting through 2020, reached the peak around March 2022, with year-on-year gains touching 26%, and then begun to slide. They're still falling now. In 3 years, the national index has shed almost 20%, with some areas down 30%. Calling it a plunge is not an exaggeration. Australia's pattern from the early pandemic up to March 2022 looked similar to Canada's in timing, but the actual numbers were very different. Our national price index saw peak annual growth of around 25%, while the biggest annual decline was about 7%. In other words, the upswing was comparable to Canada's, but apart from a brief pullback in May 2023, the rest of the time has been rising. Since February this year, the market has even shown signs of acceleration. Stacked over 5 years to now, Australia's national market is up 43%. Canada's 5-year gain is 23%. And if you narrow the window to the past 3 years, down nearly 20%. Compared with pre-pandemic levels, it's not that bad, but anyone who bought at the pandemic peak in Canada is feeling the pain. Canada's population is 41 million, Australia's 27 million. Canada is an immigrant nation, so is Australia. Canada sells resources to the United States and Australia sells to China. Both are Commonwealth countries. With social systems and property logic so similar, what has driven such a big gap in price outcomes? Number 1, the housing affordability crisis. Look at Canada's affordability in 2025, and you see this isn't about a single city or group anymore. It's a disaster sweeping the whole country. The latest OECD report shows that since the global financial crisis, Canadian home prices have grown far faster than in the US and the Eurozone, with the price-to-income ratio up 60%. When your wages have only risen 17%, but home prices have surged 76%, from $417,000 in 2015 to $735,000 in February 2025. What does that mean? It means ordinary Canadians are finding homes increasingly out of reach. Vancouver and Toronto are even more extreme. The latest International Housing Affordability Report ranks Vancouver the 3rd least affordable city on Earth, behind only Hong Kong and Sydney, with Toronto right after it. On the other hand, 2025 and 26 bring a wave of mortgage renewals. According to the Bank of Canada, 60% of mortgages will come up for renewals over these 2 years, most of them 5-year fixed loans taken out during the pandemic at historically low rates. When those homeowners face rates jumping from around 1.5% to above 4%, monthly repayments will rise by hundreds, even over $1,000. A Royal LePage survey found 57% of homeowners expect payments to increase at renewal, with 22% bracing for sharp increases. Some are already considering selling or downsizing. You work hard for years and end up being forced to give up your home. That's a harsh reality. And that's assuming you've still got the chance to work hard. If the job opportunities aren't there, what then? Number 2, Canada's unemployment surge. In August alone, 66,000 jobs vanished, Canada's worst single-month loss since the pandemic. More worrying, over just 2 months, more than 107,000 positions have disappeared. The unemployment rate jumped to 7.1%, the highest since 2016 outside the early pandemic. Nearly 1.6 million people are now looking for work nationwide, a surge of 13.8% compared with the same time last year. What's more frustrating is that this wave is destroying the key pillar of Canada's housing market, the purchasing power. Manufacturing shed 19,000 jobs, transport and warehouse cut 23,000. Even professional, scientific, and technical services axed 26,000 roles. These are the core industries that prop up Canada's economy. People without work have no income, so of course they can't buy homes. Even those still employed are afraid of losing their roles. Who's confident enough to commit to a mortgage? Unemployment has spiked among workers aged 25 to 54, the prime home buying cohort, who are now struggling just to get by. Youth unemployment is as high as 14.6%, which means the next generation of buyers simply isn't there. With unemployment this elevated, it points to deeper problems in the economy. Number 3, Canada's economy near recession. Canada's recession risk is now very high. In the second quarter this year, the economy contracted by 0.4%. That's after a statistical revision. Before the revision, it was down 1.6%, and it was the second straight quarter of decline. Looking at the current trajectory, the question isn't whether a recession will happen, but how severe it will be. The Bank of Canada's governor has acknowledged that under today's tariff environment, growth in the second half is expected to be around 1%. What does that tell you? Forget growing, just try not to shrink. The Bank of Canada put the probability of entering recession by the end of 2025 at 55%, basically a coin toss. Labor productivity plunged 1% in Q2, the biggest drop since the fourth quarter of 2020. Output fell across all 9 major industries, with manufacturing and wholesale trade hit the hardest. Canada's industrial performance ranking has slid from 5th in the world in 2000 to 20th today. And investment in industrial equipment is at its lowest since 1981. This is a structural decline. As the central bank governor put it, this isn't just a shock, it's a structural change. Pair this poor economic performance with population growth stall, and you've got the perfect conditions for housing market collapse. If you have any questions about property investment, please book a free 15-minute discovery call on our website. If you want a team offering one-stop service to help you build a property investment portfolio, achieve financial freedom, and retire early, join our Vision membership by booking a 30-minute obligation-free discovery session to start with. Or to keep it simple, our data-driven buyer's agency service can help. We buy and manage properties for our clients anywhere in Australia. Links to the service are in the description below. Number 4, Canada's population and immigration U-turn. Canada's population and immigration policy are going through an unprecedented change that no one expected. In the second quarter of 2025, population growth was just 0.1%. Apart from the pandemic years, that's the slowest pace since records began in 1946. In just 3 months, 59,000 non-permanent residents left the country, the biggest quarterly drop since 1971. Think about it, from adding 1 million people a year in 2022 to near zero growth now. This sudden heartbreak shift in population policy is reshaping Canada's economic and social outlook. How did this turn begin? In October 2024, the federal government announced immigration cuts. The permanent migration target fell from 485,000 in 2024 to 395,000 in 2025, a 21% reduction. More striking, the government set a cap for temporary residents, aiming to bring their share of the population down from 7.4% to 5% by 2026. This means over the next 2 years, nearly 450,000 temporary residents will need to leave Canada. Statistics Canada projects this will push the population down by 0.2% in both 25 and 26. If that happens, it would be Canada's first annual population decline since 1951. This sharp policy pivot reflects a fundamental shift in Canada's political and economic conditions. Since 2022, Canada has seen an unprecedented immigration surge, 1 million newcomers a year, with 60% classed as temporary residents. But as the jobless rate climbed to 7.1%, the housing crisis worsened, public services were stretched thin, and public support for immigration fell sharply. Economists point out that non-permanent residents now make up 7.3% of the population, down from the 7.6% peak in the fourth quarter of 24, but still a long way from the 5% target. What surprised everyone most was how fast and how thoroughly the policy flipped. In less than 2 years, Canada went from throwing the doors wide open to closing them. Study permit approvals plunged from 245,000 in the first half of 24 to 149,000 in 25, down 39%. Work permits under the Temporary Foreign Workers Program were also slashed from 410,000 in 24 to 300,000 in 25. This drop doesn't just dent Canada's international image, it could weigh on growth for years. Without immigration as a driver, economists expect GDP growth over the next 2 years may struggle to top 1%. Property prices are likely to fall across the board, with the apartment market taking the hardest hit. Number 5. Condo market crash. How severe is the downturn in apartments? You could call it a disaster. From 2022 to the first quarter of 2025, condo sales in Toronto collapsed 75%. Vancouver fell 37%. Inventory more than doubled, and prices fell. National condo prices have dropped to their lowest since June 21, with the cost per square foot down 21% from 2022 peak. When a segment that accounts for half of all new home building goes into freefall, how long can the broader industry hold up?
Not long ago, everybody was getting a condo. What has caused the condo market really to bottom out?
They're at numbers we haven't seen in 20-25 years for number of properties actually selling. You're seeing tons of cancellations. And for these developers to start building, in most cases, they had to sell out 70% of the units to put a shovel in the ground. Who's willing to wait 4 or 5 years to move into a property that they're going to buy? And yes, there's maybe some downsizers, maybe a handful of first-time home buyers, but really investors were driving that market. So, right now we have enough condos. It's very clear in the inventory data, and it's been like that for a long period of time. Did we build the product that people actually want? A semi-detached home in a single-family neighborhood, because that's what they actually want.
In Greater Toronto, more than 20,000 unsold units are piled up. At today's sales pace, it would take 6 years to clear them, when a normal market needs only 14 to 16 months. Buyers who entered at the top now find their $1 million new condo is worth only $700,000 to $750,000. Data from Urbanation show that in the second quarter of 25, Greater Toronto sold just 502 new condos, 91% below the 10-year average. This isn't a market correction, it's a market collapse. In Canada's condo market, investors make up the majority of buyers. From deposit to handover, the timeline can be 2 to 3 years or 4 to 5 for some projects. And in that time, the market can flip. With prices falling, both pre-sales and settlements are in trouble. Newly finished projects and those just launched can't find buyers. It actually brings back memories of 2014 to 2016, when Sydney and Melbourne were hot for off-the-plan apartments. Back then, investors bought in, prices rose, and they flipped before settlement for a neat profit. Developers seeing strong demand ramped up construction. Then in 2016 and 2017, tighter rules on overseas lending plus a string of government measures cooled the apartment market. Too many apartments were built, but they couldn't be sold. It wasn't until 2024 that the apartment market finally recovered. We covered a lot, so let's circle back to the question we asked at the start. With Canada's housing market in trouble, will Australia fall in the same way? If you know Australia's economy and property market, you've probably got your own answer by now. If not, no worries, here's a comparison. Number 1, Canada's price-to-income ratio is very high, but Australia's isn't much better. On this point, they're almost neck and neck. When people can't afford to buy or hold a home, they naturally don't want to buy. But Australia's government encourages buying. There are various grants, lower deposits, and borrowing is getting easier. So even though prices are expensive, those who want to buy can still just manage to get in. Number 2, Canada's unemployment has shot up to 7.1%. Australia is in the opposite position on jobs. Unemployment is only 4.2%, even lower than before the pandemic. If you want a job, you can find one. Number 3, Canada's economy is trending down with recession risk, but Australia's economy, for now, is holding up. At least we're not in negative growth. Number 4, Canada's population growth has stalled, but Australia's not the same. New migrants arrive every year. With the population rising, there's a natural demand for housing. Migration is the fundamental driver supporting Australian home prices. Number 5, Canada's apartment market is plunging. Australia went through that a decade ago. After that lesson, local investors shifted their strategy, looking for scarce assets like detached houses. To those who are overly pessimistic about Canadian property, you don't have to be. Even in today's conditions, it's not as if every housing type is falling in every city.
And while home prices have come down slightly here in Calgary and in pricier real estate markets like Vancouver and Toronto, Canada's smaller and mid-sized cities are still seeing home prices rise.
A home in St. John's, Newfoundland will cost over 13% more than it did last year. Winnipeg home prices have jumped more than 6%, while homes in Trois-Rivières have taken more than a 20% jump.
In Montreal, the condo market has barely wobbled over the past 5 years. The trend has been steadily upward. In Greater Vancouver, detached house prices are actually not far off their pandemic highs. I've said in many episodes that I'm positive on Australia's housing market for the next 20 years. That view hasn't changed. If you're interested, please go back and watch the latest episodes. Here's an oversimplified way to understand it. As long as migration numbers are strong, the housing market won't run into major trouble. If migration falls short or stops, then in the short term, the market might still look fine, just like when the borders were shut early in the pandemic and the government flooded the market with liquidity. But over the long run, the housing market may not hold up. On the comparison between Australia and Canada, my view is that there is no direct comparison, because the rules of the two property markets aren't interchangeable. Why? It's simple. Australia is a different country. You can't really compare national housing markets, just like you can't line up political systems, economic features, population patterns, or geography and expect them to match. Even within Australia, cycles and characteristics can be completely different from state to state, even from suburb to suburb. Cross-country comparisons are meaningless. At Aus Property Strategy, our view is the logic of price rises and falls is the same, supply versus demand. But the underlying drivers behind both sides of that equation differ almost entirely across markets. Human nature works like this. We think the way to invest in property, to handle relationships, to read the economy and politics in our old environment should apply everywhere on Earth. Or we have a few life lessons from where we came from and we think we've got it all figured out. When we arrive in a new place, we don't want to admit we don't understand it. And we don't want to start from scratch. Yet we still act like the know-it-all. Investing isn't about the present, it's about the future. Canada's market isn't great right now, but the trend I see is the national index building a base. When policies shift and the economy improves, a booming market can happen very quickly. Our monthly webinar, the APS Market Insights series, is happening on Thursday, the 2nd of October at 8 p.m. Sydney time. In this live session, we'll break down everything that's been happening in the Australian housing market throughout September, including key trends, local economic fundamentals, and what's happening globally that could affect property prices in Australia. We'll wrap up with a live Q&A. Seats are limited, so make sure to register now on our website, or just click the link in the description below. If you made it this far, please give me a thumbs up, subscribe, and share this with your friend. Turn on the notification bell to watch new weekly videos. And have a good one. Bye.